All right, good morning, everybody. It is Thursday, May 5th, 2022, Cinco de Mayo, and we're going to get started here with our pre-market. Yesterday, quite an interesting day, right? We had a really aggressive sell-off in the morning, which we happened to capitalize on. And then, I guess, once the Fed announcement came out and the bears tried to sell the market off, Powell started speaking, and next thing you know, he's telling everybody we're going to be making this smooth. Everything's going to be fine. We're going to be making this work for everybody. And now we get this major rally back up. So Powell, the soothsayer, brought the market back up. But like I said, I'm very skeptical of any type of bullish breakout. So we came up, and it's interesting to note. I'll bring up my other chart here. We came up to the highs that we made of last week, right? We came up and came to 43.03 back on April 26th. It pulled back. Then we got the attempt by the bulls again to break out. We got the same high at 43.03 again on April 28th. And then today got this attempt by the bulls to break out once again and came right back to 43.03. And now we're failing and pulling back again. I'm staying with my argument that regardless of what the Fed just said or what Powell said yesterday to try to smooth things over, I'm very skeptical of a major bullish breakout. Remember, anything's possible, and I could be completely wrong, and we could be chugging to new all-time highs, which is perfectly fine because as intraday traders, we just adapt to whatever the market's doing. But like I said, I'm a little skeptical of any type of major breakout, and again, we came right to 03 and failed. I want to go back to yesterday morning and just kind of review what we ended up doing. We basically caught the entire sell-off right after the open. So my first trade call was actually before the market opened, right off our VWAP and fast-moving average. That did get a pretty nice push down from 41.80 right down to the low of the overnight session at 41.67. And then just after the open, tried to take it short off the fast moving average, but we found a low. But here is basically where we really started to take off. Took a short off the orange power level, and then we had a KP yesterday running across right there. So we took this short and then this short, or at least I did. And then it started to go in our favor. We added, and I called the short here, got short, and then added and called another short here, and then talked about adding here and here with our target being right down to 41.42. In fact, I told everybody, let's take our positions off at 41.44, just a little bit in front of it, just in case it doesn't quite reach that level. And so continue going, and then got another short position on when we came back to the 250% of the day before, our expected support zone, which became a perfect resistance, and continued to sell off, came right back and retested it, and then we came down. And remember, the target was 44. We came right down just in front of 41.42 quarter, our ultimate target of the day. And then this I believe, well, this wasn't quite the Fed announcement just yet, but then we came all the way back up and came right into 4200 again. So here's the thing about our major eye levels. Typically, we're going to hold one and come down, test the other, and if we can't break through, we typically hold and come up and retest the next major eye level. So we came back up right to 4200, tested it multiple times, got this major sell-off again. This was right around the Fed release, right about here. So it got super messy here when the Fed announcement came out, pulled back, and then I believe Powell started to speak and suit things up, and started to rip for this incredible rip your face off bull rally. And then again came right up to 43.03 and just could not get through. And in the overnight session here, you can see that the bulls tried to come back up, get through the high of yesterday at 43.03, and failed just a few points in front of it. And now we're coming back to test our major eye level at 42.56.50 right now. So let's go ahead, we'll jump up and dial down and then talk about the levels we want to pay attention to this morning. So coming on up, we'll look at the daily really quickly. Remember that 2 days ago we talked about the potential reversal bar, that beautiful doji on the daily for that close on May 2nd. And then sure enough, May 3rd, May 4th, and here's that continuation to the upside. So pretty nice follow through. We don't necessarily have the strongest bearish signal, but you could argue that we do have a double top up at 43.03 and have a bit of a bearish divergence right now from yesterday's high. So I will mark it as for whatever it's worth. And let's go down into our 4 hour. 4 hour also got a bearish divergence from the overnight highs. So again, for whatever it's worth, we also could argue that we made a double top at 43.03 here. And if we look at the divergences, there's technically a higher high, right? Even though we are technically a tick lower than this high back here. So you've got that. But barring all of the divergence setups, as far as levels go, not much else to mention. We talked about holding just around the structure level up above, holding 4200 and breaking through. And now we're pulling back and coming right into our next structure zone, which was, remember, 42.56.50 here. So let's talk about the levels we're going to work with this morning coming into the open here. It is quite messy. There's like this list is a little garbage over here, right? Between 4200 and 4213. But let's take a look at everything else. If the market continues to pull back this morning, then we're going to be contending with, for me, this little cluster in here, and maybe I can exaggerate this so everybody can actually see what we're dealing with. If the market comes down and does appreciably hold 42.56.50 to the downside, then we're coming down into this little pocket that I highlighted between 42.40 and 42.41.75. That little pocket to me looks nice. Of course, there are two other levels there that could be relevant, but for me, what sticks out is 42.40 to 42.41.75. And if that ends up breaking, then they're going to contend with 50% of the day before, whatever that's worth. I don't necessarily have a great alignment. In fact, there's really not much going on, at least from this zoomed out 60-minute perspective at that 50% level, but you never know. We saw the market come down and bounce right off the 50 a few days ago for a beautiful trade. So you never know if that's going to work. And then if they continue to chug lower this morning, we're just into, like I said, this zone right here is just a whole bunch of garbage. And it kind of is, because if you look back, it's exactly where we were chopping up and down for quite a while for that whole day back on April 27th. So that whole messy area is what these three levels are kind of outlining here. These are fib retracement levels and swing highs that I marked. So if we do break 50% of the day before, we're coming down into this pocket between 42.08 and 42.13. And then if that doesn't hold, I think we're right down into this major swing from 2 days ago, right here at 41.95, 50 into the 4200 major eye level. So that little pocket is there. And like I said, it's just, there's just a whole lot over here. So that's why it looks fairly messy as far as the levels go. And then any further below 41.95, we do have some minor eye levels and a retracement level here at 41.79. So just be aware of those levels, but I don't necessarily want to be trading back within yesterday's chop. I'd rather just be short. If it's selling off, I'd rather just be short into this area rather than trying to play this as a long or something. And if we end up breaking through 79, we're back into all the chop from the last 2 days. So probably don't want to be trading between these two retracement levels I have on the chart. I mean, that's the last 2 days of garbage price action, basically between 41.50 and 41.80 there. So I wouldn't want to be messing around in there. And then a little bit further down, if the bears are really strong here and they can actually break through yesterday's low and the major eye level at 41.42 quarter, which has been working pretty nicely here throughout all this chop. Then we're going to be down into this little shaded zone you see right around 41.28 is just where we found a really strong support back on May 3rd. So could potentially find buyers there when we revisit that zone. So that's why I have it highlighted here. So on our shorter time frames, as we come down into that area, I'll see that as a potential support zone. A little deeper from there, and it's just right into these last three levels until we're back to the low of the week. So if that little area of potential demand there at around 41.29 doesn't hold, we've got 41.08 to 09. We've got this little pocket right around 40, really more so 40.94. And that was that level we've been watching for basically the whole week now. So 41.09, 40.94, and 40.80 are the three levels that we have here until we're back down to the low of the week. And then from there, it's all the same levels that we've been talking about for a while now, right? So if the low of the week breaks, it's everything that we've been talking for the entire week, if not for the last 2 weeks. 40.42, 40.23, the major zone here around 4,004. And then if that major zone breaks, it's a nice clean shot all the way down to 39.45, the major eye level, of course, with a minor level 5 points, bounded by two minor levels, equidistant, basically 5 points away. So that little zone there, and then it's 39.14, 38.45, and then the next major zone at 38.22. Now that's pretty far down. Not out of the realm of possibility in this type of market to actually get that far, but I think that's all we need to talk about on the downside. If the market does rip higher, which I told you I've been very skeptical of on every bullish kind of impulse out, I'm very skeptical of continuation. So if the bulls do end up ripping higher against my expectations, we've got to talk about what's up above on top here. So first things first, the bulls have to get through the previous daily high and the minor eye level 06. So we've got this little pocket 03 to 06 that needs to break. That would be the first thing that would give us a little faith in the bulls. With the caveat that if we just peek up through and then come right back down, that's a beautiful peak above and fail formation, right? So getting up appreciably through that level and holding above will bring us into our first contention zone, the major swing low at 43.20 into the major eye level at 43.2450. So that's the first expected resistance zone. If they continue to chug through, the next major zone I'm really targeting is 43.55 to 43.61. There's the caveat that there are a couple levels in between here. We have a smaller retracement level at 36, and then the larger leg retracement at 43.44, and then the minor level at 48. So there's a couple things stacked between our 24.50 and our 60 area. So those are there just to be aware of, but these are the ultimate larger zones I'm really targeting. So 21 to 24, or 20 to 24, 55 to 61, and if they continue to get through there, our next major eye level is all the way up at 43.97. So keep that in mind as kind of a bigger target. And then we have obviously 81 in the way. And then the next major retracement level of the entire sell-off, if we were to zoom out and look at the huge leg down, is up here at 44.11. So maybe we'll have a little pocket here from 11 to 15 as our potential resistance if they get through the major eye level at 43.97, 4400. And I'll go ahead and make sure this is on all my charts. And that's basically it for the morning. If they do break out to the upside, this is what we're dealing with for the next 100, 150 points up. And then if they sell off below the weekly range here, we've talked about the major levels below. And then obviously within the intraday price action here, staying below the orange power level, not being able to get through the highs of the day before is telling us we can expect lower prices here. Again, staying below that orange power level opens up all these levels below that we talked about for the last 5 or 10 minutes here. Like I said, between the two major retracements here, 41, 49, maybe even just the low of yesterday to the high of the day before, up around 4,200. Basically, between 4,200 and 4,140 here, it's pretty choppy. So it could be messy. So kind of hands off within there. And then even just a little bit above 4,200, that whole zone from 4,200 to 4,213, we're coming back and pushing right into all of that garbage we were trading in back from last week. So not necessarily the best part of the chart to be getting aggressive in, but it is what it is. There's a whole bunch of levels stacked right in there. So hopefully that helps you guys this morning. Getting below 50% of the previous day and staying below, even more of a case for the test of 41.42 and lower. Staying above 50% of yesterday, getting up through the orange power level in the close of the day before, and then up through the high of yesterday gives us a little bit more faith for a potential breakout, even though I'm going to be skeptical of any further movement. So have a great morning. We'll be back on Monday of next week. We'll take a look at the larger market and see if there's any new clues as to what we could expect going into the week. So have a great morning trading session. Have a great weekend, and I'll see you all on Monday of next week. Take care.